This is Chris from DailyForex taking a look at the S&P 500. Early during the trading session on Tuesday, we have seen the S&P 500 dip, but since then, we have seen it turn right back around and show signs of strength. By doing so, I think this is a market that will eventually try to get to the 5,300 level, an area that repudiated the market previously. We have seen a couple of shooting stars in a row, so I think this is an area that's going to be difficult. And it's probably worth noting that the producer's price index was a little hotter than anticipated, but the market has recovered quite nicely since then, as it looks like traders are simply willing to ignore that. If that's going to be the case, then we have a situation where we more likely than not have a buy on the dip mentality return to the market. And at that juncture, I do think that any dip has to be looked at through the prism of perhaps offering a bit of value. The 50-day EMA sits above the 5,100 level, which of course in and of itself would be psychologically important. And then of course we have the 5,000 level, which is a major floor in the market, a large, round, psychologically significant figure, and an area where we've seen a lot of action at previously. Because of this, I assume that the 5,000 level is a hard floor in the market at the moment, and I do think it would be very difficult to break down below there. Keep in mind that the S&P 500 is driven by a handful of companies anymore, so this is essentially an ETF that you are trading. If the top 5 or 6 companies continue to flourish, so will the S&P 500.